Have you ever looked at a company's financial results and just thought, wait a minute, something doesn't quite add up here? You see a headline that screams success, but you get this feeling there's more to the story. Well, let's dive into one of those, because we're about to dissect a really fascinating profit story from Rich Capital Holdings and uncover what their numbers are really telling us.
So, on the surface, the big news here is this incredible turnaround. We are talking about a company that went from being deep in the red to solidly in the black. And in just 1 year. It's exactly the kind of headline that makes investors sit up and take notice, thinking, wow, something amazing must be happening with their business.
And this slide just lays it out in black and white. Look at that. On the left, first half of 2025, they're looking at a net loss of almost $500,000. Now, fast forward just 1 year to the right side, they've swung all the way to a net profit of over $500,000. I mean, that's a total swing of more than $1 million in 12 months. Pretty impressive, right?
So, naturally, this brings up the million-dollar question. Literally, how did they pull this off? Did their main business suddenly catch fire? Was this a sign of some huge, sustainable recovery? This is the central mystery we need to solve. Okay, so let's start digging for answers. And right away, the story takes a very unexpected turn. We're calling this the revenue paradox, and you're about to see why. I mean, your first thought, and it's a perfectly logical one, is that a huge jump in profit must come from booming sales. More customers, bigger projects, just more money coming in the front door. It's business 101. So let's take a look at that all-important top-line number, the revenue. And here's the paradox. Whoa, revenue didn't just go down a little bit. It completely collapsed. A 75% drop. Just think about that for a second. How in the world does a company post a massive profit when its sales have fallen off a cliff? This does not add up at all. It's the exact opposite of what you'd expect. So this just makes the mystery even deeper. If the money isn't coming from their main business, their day-to-day operations, then where on earth did this $500,000 profit materialize from? It had to come from somewhere. And that brings us to the big reveal. It wasn't some miracle recovery in their operations. It was what we call a one-time windfall. Let's pinpoint exactly where it's hiding in their financial statements. Okay, now check out this simplified statement. We see that huge revenue drop we just talked about, but look at the very next line, other income. In 2025, it was basically nothing, just 15 grand. But in 2026, it explodes to over $1 million. This one line item right here is the hero of the entire profit and loss statement. It single-handedly wiped out all the weakness and manufactured that profit. And this is so crucial to understand. This profit didn't come from them being better at their job, building more things or providing more services. In fact, their core business got weaker. The profit came from a single, isolated financial event. And here it is spelled out for us, a gain of $1.07 million from selling a piece of their own company, specifically a subsidiary called Rich Batam Private Limited. They sold an asset, and the profit from that sale went straight to the bottom line. This is what we call a one-time gain. And it's so important to get this difference. See, operational profit comes from the business doing its thing, day in and day out. A one-time gain is, well, it's just that, a one-off. You can only sell an asset once. The best analogy is selling your car to pay your grocery bills for the month. Yeah, it works, but it's not a sustainable plan, is it? You can't sell your car again next month. So, mystery of the profit solved. But wait, we're not done, because that's only half the picture. Just because a company reports a profit, that doesn't automatically mean its financial position is stronger. Now we have to dig into the next layer and follow the actual cash. This is a question you should always ask when you're looking at a company's finances. An accounting profit is nice, but cash is what pays the salaries, funds the new projects, cash keeps the lights on. They are not the same thing. So with this $500,000 profit, you have to wonder, did Rich Capital's bank account actually get bigger? Let's break down their cash flow. Step 1. Their core business operations actually burned through $322,000 in cash. They spent more money running the business than they brought in. Step 2. Their financing activities, things like paying down debt, used up another $27,000. So what's the grand total? The company's cash balance actually went down by $349,000. And this is the other huge takeaway here. Despite that shiny, positive headline, the company's actual real-world cash position got worse.
The income statement looked great on paper, but the cash flow statement, which tracks the real movement of money, tells a much, much more concerning story.
Okay, so we figured out the profit came from a one-off sale and that their cash is actually down. So what does the future hold for Rich Capital? Where do you even go from here? So what's the game plan? Well, according to their own report, they're basically on the hunt for a whole new engine for growth. They're talking about sourcing new projects, making strategic investments, maybe even buying other companies or forming joint ventures. They're trying to rebuild that shrinking top line.
And this quote, straight from their outlook, really confirms it. They know the main business needs a serious overhaul, and they're telling investors, hey, we're looking for new ways to grow. They're trying to find a new foundation for the entire business. And all of this leaves us with the single most important lesson from this whole deep dive. The next time you see a headline about some miraculous corporate turnaround, be a little skeptical. Dig just one level deeper. And always, always ask yourself that crucial question. Is this profit sustainable, earned from the day-to-day grind of running the business? Or is it a temporary fix from selling off the furniture? Because that answer makes all the difference in the world.